transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is the chart of the NASDAQ. We were looking at that early this morning because we were in an area where we think we were topping, and we wanted to see that yesterday's action to today's measured to 23473, and the high was 23476. So it missed it by 3 points. So I guess that one didn't work. But anyway, it did get there, and I can see the S&P has made a new high. The Dow Jones has not yet. It's still easy, and of course the Russell is far too far away. It's barely, in fact, the Russell is making a 382 as we speak, and whether that stops it or not, we don't know. But you know what, folks, nobody else does either. But let's take a look at one of our trades that we had today. Coming in today, we knew that the market had broken below this level right here, and we went down to the 1.618 expansion, to the 618 level. Okay, so this is going to be major support if it can hold it. Now it's still $4 above it, but looking at it on the small time frame, and we just do that right now. I'll show you what we were watching. Okay, the market, you can see here we had the A, B, C, D pattern right there. Okay, now there's the sell. There's your spot right back here. You'll see there's where we came in here. We were able to take $8 out of that without any trouble at all. You can see it didn't quite make the exact 382, but it made the ABCD, and we made some money on that on the downside. Now the next one we had was the natural gas. I'm showing you these because they're fun to look at, and nothing changes in these markets. They repeat over and over again. That's all that you can say. So here's where we were with the NASDAQ. You'll see here we had a really nice pattern here. We had a 3-drive pattern here. We had the pullback right here. We had a lot of things going. So we bought this low right here, okay, right there. We bought it right there, which was because the market was still going higher at that time. It was going right down to the 382, and that's where we bought it right here. We sold it right here when it completed the ABCD to the upside. We had the choice of going short, but the session was ending, and so we didn't take the short side of it. We had 5 trades today, folks. We had 3 winners and 2 break-evens. Net was a little over $1,300, which was nice. Sometimes you make more, sometimes you make less, but I was trying to tell the folks, you're here, you're trying to pick your spots to try to make a couple of dollars, and that's what we were doing, and it worked really well, just using ABCD and a tiny bit of Fibonacci. That's all we were doing. Okay, now next thing I wanted to talk to you about here was our trade of the day. Okay, now this, folks, you got to do this one. In fact, I'm going to make a wild guess here. I'm going to make a wild guess. Now, this is the daily chart of the soybeans, folks. Jeff Hughes will be our guest here at the break. So this is Mother God and country, and you know how much I love the country. Okay, here's the left shoulder. It's a daily chart. There's your left shoulder of the soybean right there. There is your head, and there is your right shoulder. Get this out of the way here. Okay, and put it right there, and there it is right there. Now, I was originally trying to buy it at 10.15, but it didn't get there, so we bought it at 10.19 and 1/2. It's got a well, it's breaking even right now. Folks, I am going to be long soybeans coming into this trade. Now, there's 2 reasons. One is the real critical season for the soybeans starts on August the 1st and goes to the end of August. That's when the beans are pollinating. You have a beautiful A, B, C, D pattern to the downside. Remember, we sold that 135 pattern right here last week and netted us well over $1,000. In fact, substantially more, but that's neither here nor there. Now you've got a new trade with another A, B, C, D lined up right here. There's the low of the day, folks. It's exactly the 61% retracement. I had the order setting pending below that. And believe me, folks, I was looking at that this 61% retracement off of this low right here when I should have been. Let me get this. I like that head and shoulders pattern because it's so perfectly symmetrical. But here's what I was also watching. I wanted to know from the high to the low, we came in right there was a 61% retracement. That's what I was trying to buy right there. It missed it by a penny. So we went ahead and went at the market. We got filled at 19.5, and we put our stop here at 10 at 2010. So that's what we're losing. Now, the thing is, you're in the middle of the summer now, and these weather patterns are crazy. If we get some really weird weather here over the weekend, you got Friday, Saturday, and Sunday, or maybe something coming in, that's when you get these expansive moves. But on the other side, if it doesn't happen, it gets back to supply demand, and the supply demand doesn't look that good because it looks like it's ready to collapse, and it certainly could. But you got to take the patterns because you don't know which ones are going to work. Sometimes they work, sometimes they don't, and that's the key to what we're looking at. But we got a lot of things happening about stuff we talked about yesterday that's working pretty good, and we want to get into some of that. The next one we're going to take a look at is we're going to come up here and look at the let's get up here and watch the British pound, because British pound was one that we were paying very, very close attention to yesterday. If you'll remember on the show, we'll get it up here right now and get it ready, and you'll see. 1 second, we'll get that daily chart out because that's what we were watching. And there's where we were, folks. There's where we were sitting right at the 50% retracement here yesterday. 8 days up, 2 days in a row, exactly at the 50% retracement. This high was higher than yesterday's by about 2 pips, and now we've dropped well over, wow, this is a 150 pip drop. This is an $800 drop, and this tells us that the dollar is strengthening. And if the dollar is strengthening, that should mean gold going up, but that's not happening, which is not unusual. But that gives us a target here, right here in the pound at 131.47. That's down 300 pips from where we are right now. So that's why that one looks really good. Now, we also said you could also do the euro. You shouldn't do both because if you do that, you're both doubling up the position. But here's the euro. You'll notice the euro, get the daily up on that, so you'll be able to see it real clearly. As that's what we were watching yesterday. It went up to the 786. Now, you see it took out the previous day's high by a little bit more than the pound did. The pound only took it out by a couple of pips. It's the weakest. So what are you supposed to do? Sell the weakest, not the strongest. So this has been the strongest, and we backed off quite a bit so far today, and nothing dramatic, but there it is right now. So if this market is really good, remember this is 53% of the dollar index. So that's why it's so important. If we clean this out and saw this run like this, just like we were watching for the 382 right here, the 382 right here, the 382 right here, we went watching again because it's made a new low. So we want to watch for that because that's going to be the key. And what was the low today, folks? Exactly, 17066. It's already rallied 31 pips. So that's a sign that, maybe this is going to be a bottom. It's only a 1 day correction, but this is a strong market. That might be all you get. So we got a break coming up. We're going to look at a couple of stocks, and I think we'll be right back. Stay with us, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN. educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, we're back, folks. I've already covered the stock of NVIDIA. We've had a question, of course, about Tesla. It always pops up. By the way, as I mentioned, Jeff Hughes will be our guest of Alpha Insights today. Hold on one second, and I'm going to ask him some questions about the, margin, what's going on with margin with folks, because that's usually a high figure when you're making highs like this. Now, here is Tesla. We'll do the 30-minute. See where we are. I think oh my goodness, it got hit really hard. Is that true? Wow. I didn't even know anything happened. Well, it broke and it's already rallied back $20, so there's nothing wrong with it. Let's see where it stopped. Looks like it stopped right at the 786. No wonder it was in the news. I must have been earnings or something. Yeah, it stopped right at the 786 today. And then, of course, look when it went above the open. Then it's when it's had its big run right there. See, there's the opening price is really good for you because once you get above the open and you're halfway through the day with action like that, boy, you don't want to be short because the people that sold it and then decided to change their mind, short covering, that makes it run up. But these markets are extremely active, folks. I mean, like action like we've not seen in a very, 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 very long time. And I mean very as very, very, okay? Let's move on. I just point out the fact that we did make the ABCD from yesterday in the NASDAQ. That just went up and hit the number pretty much on the thing. We did the same thing with the stop and P. It got up to 23, which it was supposed to do. But it's still early in the day. Oh, we had one other really nice trade, folks. Let me show you the one. This was one of our break-even trades. We'll get the hourly chart up here on the crude oil because we actually bought this 61% retracement right here, folks. And the market rallied up to here. And what we did was we put our stop so we would not lose. We bought it at 65.55. Okay. The market rallied up to 65.85, which was 30 points, which was our original loss if we got hit. And it, and it didn't. So what we did was we moved our stop from 65.45 back to our break even. In other words, I made 300, but it didn't get filled, so we didn't want to lose anything. And then you can see once it went back through that 618, where did it do? Where did it go? It went right down. There it is, right there. There's your 786. So 618 didn't hold it, But the 786 did, because from there, it's rallied, over 50 cents or $500. That's the difference. It's all about risk control, folks. It's not how much money you make. It's about how much money you don't lose, and that's what we're paying attention to, okay? By the way, those of you that don't get the newsletter, try to get a copy of it this week. This is going to be my longest newsletter ever. Also might be my last, but it will be my longest, okay? We're going to be watching it closely this weekend for absolute certainty, okay? Let's get up here and take a look at a couple other things. We've had a question about the coffee market. 1 second. I haven't looked at coffee all week. We've been quite bullish on coffee for quite a while here because it made such beautiful patterns. That's with the K, coffee. Let's get this up here. Got a few questions. I will cover them. Jeff will be here in just a minute, and we'll get up here with the daily here on the coffee, and it's above 300, I believe. Yep. Well, it's a little bit below 300. There was the big pattern right here. That was the buy right there. The market rallied up, then it pulled off. Just, you can see the numbers. It works pretty good. There it is right there. Let's look at the 4 hour so you can see it really clearly over an intraday period. See, there it is right there. There was your pullback right to this exact 786. To the exact, folks, they either hit 618 or 786. The problem is you don't know which one it's going to hit. That's pretty much it. The most common question that I'm getting this morning, is it over in the gold market? Well, it's over on this down move for sure, but it has tremendous bearishness now, folks, because we've broken through all key support, 3,400, 3375. That tells you that there's something not right. That doesn't mean it can't turn on a dime, but you've got to be able to find a place where you don't have to risk very much. And with today's action, all you have to do is go to the smaller time frames, and it'll give you that type of analysis. Okay, I mean, that's really what you're trying to do as you're watching this. Okay, so I can see here now the gold has just popped up from that small pattern that we were looking at. There it is right there. Here's where we are right now. You can see we went down to that level. Now we're rallying back up. Now just watch how it works, because this is no more than what we do. There was your last 382. What do you think this one's going to be, boys and girls? Let's just double check it for kicks and giggles. Okay. There, we're at went just a little above the 382 right now, and this might be a bad one, because there's where we are. There, you'd be a seller here with your stop above here. That's what you'd be looking at. All right. So the sell would be at 334, and this would be at 334, 34 and 42. You'd be risk $700 on this. That's no different than this pattern right here. In fact, it's repeating exactly what it did earlier in the day. Let's see, this move went from 33.35 all the way up to, it rallied $13, okay? So this one was here at 33.26. You add $13 to that, and it takes you to where? 13 to 36. 13 to 36 takes you to 39 is where it would be an equal rally. If I did the right math, let's see if I did it right. There's your move right here. Yeah, it's going to be a little bit higher to be an equal move. Yeah, the equal move is there at 39. That would take you there. But your stop would be above this level. You're selling it right at the 382 with your stop above the 42. So it would be a $7 risk. Right now, it's out $1. I didn't do it, of course, but I'm just watching it unfold as we pay attention to it here today. Those were some of the trades that we were watching. But this was a, bear market, right at the 382, and it had a huge move to the downside, $23. And so this is where we're standing here late in the day, okay? Let's see. Those are the main ones I wanted to look at here. We have a question about another stock. I'm going to bring it up here, and that is Goldman Sachs. And the market is strong, so Goldman Sachs, well, it's actually not strong in the Dow Jones. See, Goldman Sachs is GS. There it is right there. See if it's above this coveted. Yep, it's Goldman Sachs. It's making a new high today, folks. There it is right there. The old high here was 726, and the high today was 728. So we made a new high in Goldman Sachs. That's one of them. Another big one in the gold is Microsoft. Softy has never gone down, so let's see if that's also leading the pack to the upside. It should be. And let's see, there's the high on Goldman Sachs, or it was 513. What was the high? No, 514.60, and the high today, 514.59. The exact same high. This is 514. 514.64, and this is 514.59. It hasn't quite made a new high yet, but it's there. I mean, my goodness, the last little pullback was absolutely nothing. Okay, there's what we're watching right now. Goldman Sachs, as you can see, has made a new high. One of the reasons why the Dow was strong. However, the Dow, looking at it, let's just get up here and show you what we were watching this morning in the Dow. We made a beautiful ABCD here on the open. Unfortunately, this is when our trading starts at 9 o'clock in the morning, all right? And so we were already in a whole bunch of positions, and I didn't see the ABCD here, which was the trade of the day. My goodness, I just saw that. But we did okay. That's the main thing. Look at the low. There's the exact low, 48.08. We rallied 250 points without any trouble at all. We'll be right back, boys and girls, with Jeff Huge of Alpha Insights.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hey, we're back, folks, with Jeff Hughes of Alpha Insights. Jeff, welcome to TFNN, and tell us what you're looking at in this roaring bull market in the sign of Leo.
Larry, it's great to be here. Thanks so much for having me on the show today. I will tell you what I see is I see a bull market in silver and gold, and I see stocks really, languishing. In fact, the median stock is underperforming T-bills right now. T-bills are up 2.5% or so for the year. The median stock is barely positive. And, that means half the stocks in the Wilshire 5000 are down. And I'll tell you right now, 40% of all the stocks in the S&P 500 are actually negative year to date. The S&P
It's hard to believe.
Isn't it? The S&P peaked on February 19th. It was up about 5% at that point. It's only up about 9% through today for the whole year. So more than half the performance was achieved up through February 19th. And that was only 5%. Then you had to endure a 21% decline in the S&P just to get back to break even and then make another 4%. To me, you could really see that there's a narrowing going on in this market. I mean, just a few stocks are carrying the ball. Stocks like Palantir and some of these AI plays, as well as the Mag 7, but to a lesser extent. There's only 3 stocks in the Mag 7, they should call it the Mag 3 now, that are actually even contributing, and that's obviously Microsoft and NVIDIA, which made new highs in the last week and are just down fractionally, but also Meta, which is only down about 4% from its all-time high, which was a couple months ago. But the rest of them have not made new highs since the February 19th peaks, and are all down, I think collectively about 9% on average. Of course, Tesla and Apple are pulling the whole average down. They're down double digits. Apple down 17.5%, and Tesla's down 35% from its all-time high, which, by the way, was achieved back in December. I think December 4th, if I'm not mistaken.
Okay, this next chart is the Warren Buffett valuation metric. I've heard of this before. Could you explain to us what we're looking at here, Jeff?
Absolutely. Most people associate this with market cap to GDP of the whole market, the Wilshire 5000 market cap to GDP. And usually when it gets to about 100%, 120%, that's fair value based on Warren Buffett's work. And his idea is like, well, we want to buy stocks when they're trading at a discount to fair value, when they're trading at, say, 70, 75% on a market cap to book or to GDP basis. That's creating a margin of safety, right? Where we're trading right now, the entire market trades at about 210, 211%. But if you look at this chart, this shows the top 50 stocks, the largest 50 stocks in the Wilshire 5000, and they are now trading at 110% of GDP. That's 50 stocks, not the whole stock market. And so, if we're thinking about overvaluation, we are now looking at just unprecedented valuation in the largest 50 stocks, which dominate the S&P. Largest 50 stocks are about 60% of about 45% of the market cap of the S&P 500 right now.
Oh my goodness!
It's. You're really looking at. The vast majority of stocks are just completely off the charts, overvalued.
Okay, the next one is extreme retail speculation. I see that, and I know what's going to happen, but I can't get anybody to believe me, so I'm going to shut up. What are you looking at here, buddy?
Well, there's a couple of things. Number one, we saw a report put out by Vanda Research that showed that cumulative net retail purchases by calendar year have now exceeded their record highs back in 2021, where they peaked last, and then also at the end of 2022 rather, going into 2023, we saw a big retail boost. We're now at all-time record spending highs on stocks. Households now have the highest exposure to stocks in the history of the data. In fact, retirees now have over 80% of their portfolios allocated to equities, which was the highest on record. And if you take a look at the leverage in the system, not just margin debt, which is at all-time record highs, approaching $1 trillion, but if you look at leveraged ETFs, and by far and away, 95% of them are leveraged long, 2, 3, and now up to 5 times leveraged long. These are now at all-time record extremes as of June 30th, and the data has only gotten worse since then. But that was like $135 billion have piled into these multi-levered funds that, basically lose 2 or 3 or 5 times as much on a daily basis when the market goes down, but they make 2, 3, 5 times what the market produces on a day-to-day basis. So these are clearly trading vehicles, but people are buying and holding them as though they're long-term investments just to get the juice on it.
Wow, this next chart's awesome. It shows only 2% of the S&P 500 are making new highs. 2% of 10 stocks. 11 stocks are doing that.
Isn't that hilarious? Like Friday, the S&P made a new all-time record high, but only 11 stocks also posted new highs, new 52-week highs, not even new all-time highs for that matter. And I think you and I kind of went back and forth Monday or Tuesday that 7% had made new highs, with the market pushing to another new all-time market high. It's about the same, right around 5% of stocks are contributing to these new highs. And they're, the obvious candidates, right? It's the ones that you would expect to be making new highs. The vast majority of stocks are really lagging. And this speaks to the narrowness of breadth. So, the past 3 charts are looking at extreme valuations, extreme leverage and positioning, and now we've got extremely narrow breadth. All of these things speak to, a major topping condition. And, when I look at the S&P 500 right now, and, our analysis of it, our preferred Elliott wave count, which you've got up on your screen now, it suggests that this entire advance off the 2009 low going back 16 years looks like a textbook ending diagonal, this 5-wave advance that's producing an ending diagonal triangle formation, which is the convergence of these 2 trend lines from the bottom of waves 2 and 4 and the top of waves 1, 3, and 5. And that convergence looks to us to be terminal, right? And so, what we're thinking is that, maybe the S&P 500 can edge up a little bit more. We've got a target price of about 64.25 rather, and maybe we give it a little bit. If we get a blow off, maybe it shoots up another 125 points, so we can get to maybe 65.50 if things really get out of control. But from what I'm seeing on the internals, the market is terminal at this point, and it's just a textbook pattern, as you can see from the inset, the bottom of this chart.
Okay, stay with us, folks. We got Jeff Hughes of Alpha Insights, and we want to show you his trade record here. It's really amazing, folks. Stay with us.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, talking with Jeff Hughes. Jeff, it's amazing here. You have a bearish outlook on the market, but look at your return. I mean, this is incredible. Your stock picking is unbelievable.
Well, there's an old trader's maxim, Larry. It sounds something like this: bears can make money, bulls can make money, but pigs get slaughtered, right? And so,
wow.
We're bearish, and we think that there's 57% downside in the S&P 500 to the 200-month moving average, and we think we'll get there in the next 18 months. But there are places to hide, and we found plenty of them. And over the last 3 months, really, we've got multiple double-digit, in fact, a couple up some 15, 20% in just a couple of months. In fact, just a recap of this trade sheet, which was actually published in our note on the 23rd on Wednesday night. It's an annualized return of 14.4%. Looking at the prices as of Wednesday's close, some of them are a little higher, some are a little lower today, but kind of in that same general area. We publish a note called the Alpha Insights Idea Generator Lab. It goes out to our paid newsletter subscribers every Wednesday, and it basically gives them our top actionable trade idea. And it's always an ETF, so a little bit lower risk, more diversification, perfect for individual traders and investors. And we're really looking to make somewhere between 10 and 30% on these swing trades, over a month to 3 month period of time. And, we adjust our stop losses. You can see all these stops are in red because we just raised them. And, it's an interesting way to make money independent of your view on the market. We're just buying breakouts and selling breakdowns, and we're trend following, and that's the way to make money. It's blocking and tackling, and we've helped our clients do very well this year and over the last several years, despite kind of not being 100% correct about the direction of the stock market.
Well, the direction's easy; it's up. Tell us about your monthly newsletter, which I think is the best in the business.
Yeah, we published this newsletter. It's called Huge Insights, the Big Picture. It's a macro sort of themed newsletter. We go through a lot of different views on the economy and the market, and we try and really boil it down for traders and individual investors. And we actually put together an asset allocation portfolio called the Perfect Portfolio. It's a really well-balanced, risk-managed portfolio that, tactically allocates assets across equities, fixed income, alternatives like metals and mining stocks. We've had heavy positions in gold and silver, as well as Bitcoin in that allocation. And we also use cash as a shield against volatility. And while cash is paying 4.3%, why not, right? And, what we've done is we've been publishing this for 4 years. In fact, August 1st will be the 4-year anniversary. And we're running an anniversary sale where we're offering first-time, newsletter subscribers that upgrade to paid a 45% discount. So the special rate is $99 for the first year, and then it renews at regular rates, which is $180 a year. But that's locked in for life. So if we ever raise our price, it remains $180 for those paid subscribers for the rest of their days. And wow. Our next publication is going to come out on August 2nd, and it's going to be a good one. I've really been working hard on this. And it's maybe going to be the best newsletter I've ever written, because I really want to get these ideas out there in people's hands so that I can save them. You can save as many as you can, right? And you got to get the information in the people's hands. So,
Jeff, we have something in common, buddy. You said you're working hard this week on your newsletter like you always do. Well, yeah. I'm working hard on my last newsletter because this don't work. I ain't got nothing to offer you folks, so I'm going to quit.
I'll believe
you might laugh.
I see it, Larry.
No, I have something to do, but I can play poker professionally. I'll break even if I'm lucky. I won't be able to eat, but then I'll lose some weight anyway. But I've never seen it so easy to call a top. Unfortunately, tops are harder than bottoms because greed is really hard to spot. Fear is easy because you get diaphragm, sweating and yellow hands, and your knuckles turn white and stuff like that, and you have dryness of mouth, and you don't have that with euphoria. So it's coming, and I know it's going to be really bad. And I know there's some of my gang. There's the one subscriber that I have left said, "Well, I'm going to give you till Friday." Well, today's the day, so we'll find out what happens. Anyway, you stick with us, buddy, because you know what you're doing, and with that record of stock picking in a bear market, you've done a great job, and that's what it's all about. Are you still super bullish on the silver, Jeff?
I am. It's my trade of the year. We went out in January and we said our trade for 2025 was silver. It's actually the best performing asset year to date. Our trade for the decade is gold. We think gold is going to continue to climb. We've got a target of 8,000 by the end of the decade. We think silver will get to 100 or more. So, there's a lot of opportunity in precious metals in our view. And we think people that are fooling around with stocks trying to make 5 to 9% are just wasting their time. The real bull market is outside of the stock market.
Well, you can see your chart on the small caps, which is the Russell. It's only up 5 points today, considering everything else going crazy. So anyway, I hope you folks will pay attention and get some of huge insights. I'm going to put the information for how they can reach you up here, and then we'll have you on again in a couple weeks. Okay, Jeff?
Yeah, tell them if anybody wants that $99 discount, I'll send a coupon out to them. All they have to do is contact me via my website at www.jwhinvestment.com. Go to the contact tab, say send me the coupon. I will send it immediately. And it's good through August 1st.
Well, that's good. Well, thanks for being on, pal. We really appreciate it. And may God bless. And tell Catherine I said hello.
Absolutely. Thanks, Larry. Take care now.
Okay. You bet, folks. Jeff Huge, Alpha Insights. You don't get any better letter than his, folks. Let's take a look at where the markets are right now. They're screaming and dreaming. There we got we're way above the 1.27 here in the S&P. It's supposed to stop at 23. Now it's at 27. Russell is still rallying. The NASDAQ looks like it's made a high, but, it's still early. It could probably go up another 2,000 points or something. There was a high from yesterday to today that stopped right up in here, but the others are still going quite a bit higher. And by the way, the comment that I made, folks, about the quitting this. I've been doing this for so long. My daughters used to laugh at me when I said I was going to quit at 60, 70, and 80. Now I'm 8.5 furlongs on Monday, and I'm still loving it, so I'm going to keep going. I'm wrong once in a while, but I don't stay wrong. I'm not short anything right now, but boy, I'm going to be short coming in Monday morning, so pay attention, because I've got some stuff that's looked at really. I mean, these patterns are so big that's what it is. This is the largest bull market, folks, since 2009. It started on July the 8th of 92 years ago. This is the end of this bull market. I know you think I'm nuts. Yeah, maybe I am. Well, I'm sure of that, but we'll see. We can still trade even if we're nuts. Live every day in an attitude of gratitude, and may God bless.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97, and with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the chart of the .com. This was the real estate deal, not .com. .com was 2000. I want you to see this butterfly pattern. See the ABCD right there? That's a butterfly. Perfect right there. There was your 382. But this is what we're going to see here soon. We gave back. You can see the Dow went from 13,000, all dropped in half. This low right here on March the 9th March the 5th of 2009 was exactly 61% of the retracement from going back to the 1991 bottom, I believe. And that's where we had a 618, and then you can see the 382 retracement here, the 382 retracement here. But we are going to see this. See this volume that we're seeing here? We're not getting that big a volume this time. You know, like Jeff showed there, only a few stocks are making this market go up, but they're triple digit, so they can do it. I mean, you know, we got Goldman Sachs is 700. You got well, I don't know what NVIDIA would be. It just split 1,000 to 1 or whatever it was. But this is the type of matter. This was the bottom. There was your 3 drive to a bottom right there. I showed you that before, but that's what we're looking at right now. Only upside. This is what's so important about this. This is all over the world, folks. We're seeing that in Hong Kong. We're seeing it in emerging markets. We're seeing it in the DAX. We're seeing it in everything. That's why this is the big one. This is the one that you write home to mother about and say, by golly, Mom, I didn't buy at that top. Well, maybe you should, because it might go straight up, but I don't think that it will. But like I say, I'm often wrong, but never in doubt. So that's what we're watching. The key day will be here coming into the first of the week. That Hong Kong top that we looked at, and also the one in the emerging markets, both reversed the last 2 days, right exactly from the big weekly highs. So we're going to find out if this is the day here in our market right here. The chances are that it is. It's only 20% chance. See you on the flip side tomorrow, Monday, folks, and may God bless.